warm welcome to Personal Finance. I'm Gugulethu Cele. Once more, we come to you from the headquarters of Alexander Forbes here in Sandton in Johannesburg. And today we're going to talk about how you as consumers can actually save on insurance. There are practical and easy steps to get there. But to tell us more, I'm joined by Abri van Rensburg, Senior Manager for Procurement at Alexander Forbes Insurance. So good to have you with us, Abri.
Thank you, Gugulethu.
I think there's often great to have you too. I think there's often a misconception that with insurance you can't really save much because it is a grudge purchase for consumers.
That is correct, yes. It's definitely a misperception, as there are various ways how you can approach your insurance cover in order to save money. First step that I can say what most people consider is self-insuring their contents or their motor vehicles. How they would approach that is by saving a monthly fee in their savings account, and should a loss occur, they can then withdraw money off the fund. I need to point out that there are various risks around doing it that way, because you might not be in a financial position to save the total value of your specific item. If I can say to you a situation where your house burns down and at the same time your car might have been standing in the garage. Now you're sitting with your building that's a total loss. You lost all your contents and your motor vehicle. You might not be able to make up the financial loss that you have suffered, which might then put you in further financial ruin. Other things you can consider is look at your insurance policy. There are so many sections that there are hints and tips that consumers can use to look at. If I can talk about your building insurance, you can look at the type of cover they give to you. Is it based on a all-risk cover, which basically means any loss or damage? Or do you select a peril-driven policy, which only covers you for the basics, fire, lightning, explosion? At the same time, you can then say under your house contents, are there certain items that you don't use? Maybe because of the digital age, all those DVDs and CDs in your cupboard might not necessarily be worth you replacing. So you can then say to your service consultant or underwriting advisor, please add an endorsement on my policy to exclude these from the overall insured value, thereby reducing your insured value and then saving on monthly premium.
So as you say, it's a constant review of what you need, what you don't need, and going back to your advisor to actually get a review of that. And I take it that goes back to unnecessary coverage.
That's
Do we
correct.
often find that as well with vehicles?
Most definitely. Sometimes, depending on the circumstances, most people take out cover on an open driver basis, which means that anybody with my permission can drive my car. But because the use of my car is limited to myself, I can then rather decide on a named driver policy. Same thing with the accessories. Do I really need to insure all the accessories on my car, or can I just focus on retail value?
What if I like my Bluetooth and my navigation and fancy sound system?
Then you can specify it most definitely. At the end of the day, the insured value will determine your premium together with other factors as well, like female drivers. Because they are considered a better risk, there might be a certain discount component linked to your vehicle. So if your wife is the regular driver of a car and she drives it more regularly, female discount is an option to consider. Risk behind it, there sometimes might then be an additional excess applicable if there's a male driver then in the car at the time of accident or loss.
So there's some advantages to being married, gentlemen. So good to hear that it does impact the pocket as well. I want us also to venture into the voluntary access as well, because that also has an implication. Excess as well as premiums, I take it they balance each other out usually.
Yeah, that is a very quick one. If you are price driven and you're looking for reduced premium, you can definitely talk to your advisor to put on a certain limit of voluntary excesses on any section of your policy, be it buildings, contents, motor vehicle, your all-risk section. The big issue then would be is when a loss does happen, will you have the financial means to absorb the excess? In some cases, you can insure your car, let's say, at the 10,000 Rand excess. If it's a total loss or it's stolen, then that 10,000 Rand will then be reduced or taken off your final settlement calculation. So you will then lose out on that 10,000. But if that is the risk that you are willing to take to save on premium, you can decide.
I take it also depends on what kind of cover you have, comprehensive or What else is there? Theft and fire?
That's correct, yes. You get your comprehensive cover, which is again any loss or damage. You get third-party ALNI, that's more specific to if you are involved in an accident. The third-party person that holds you responsible can then claim under your policy. You get third-party fire and theft, which then further extends it to if your car burns out or if they steal it. And then under comprehensive again, there's so many open driver policies, named driver policies, named driver with added drivers, which would then extend to you, driver, your spouse, any family member normally residing with you. So again, looking at your circumstances, you can then adapt your policy to suit you better.
To stay with vehicles for a moment, Abri, the telematics involved, which is the tracking devices and such, is that also considered to be a luxury at times and maybe can have a positive impact on your pocket if you do away with them?
From an insurance industry perspective, I think telematics is definitely the future for insurance. How it will benefit consumers is by tracking your driving behavior and showing you as a good driver, you will be able then to save on your monthly premium. But it can also have a negative effect. If you are a bad driver, it might then be, you can then be considered as a higher risk at the end of the day, which then will affect your premium as well. It can also act as a type of tracking device, which will show the insurance company that you are a good risk manager, in that if your car gets stolen, there's a higher possibility of them recovering your car with the tracking device.
I want to sidestep for a moment, and I understand that you often advise young drivers to insure their vehicles in their own names in order to build up their own record instead of having it insured in the names of their parents, in the hopes to actually pay lower premiums as well.
That's correct, yes. If it's the younger driver, best would be is to insure the car in their name, because there is a non-disclosure element to this as well, which can lead to their claim being rejected. If it's found that there was premium prejudice on the part of the insurance company, they might find a situation where their claim is turned down.
Let's go back to homes for a moment. The big question is obviously comes down to security. Homeowners insurance always goes back to the nitty-gritties about how much security do you have. Take it that's another place where consumers can save some money.
Most definitely. Some companies offer what they call an alarm discount. So if I've got an alarm, it's activated every time I leave the house unattended. At that stage, you will then get a discount on your premium as well.
But what if there's load shedding and my alarm doesn't go off? My gate, which is operated automatically, doesn't happen to work? Are there terms and conditions there?
Most definitely. Fortunately, most of your newer generation alarm systems do have backup batteries that can run for a certain number, a certain period. If by chance the alarm system would fail because of a low battery or it didn't have any backup battery, then the insurance companies will look at the circumstances around the loss. If you did activate it and it wasn't due to your own negligence or anything that you contributed to, the insurance company will then consider it, and in likelihood they will pay it out.
And there's always benefits for people who are slightly more mature, Abri. That's what we'll call them for today when it comes to insurance cover.
That's correct, yes. If I can use Alexander Forbes as an example, we offer a product called Forbes 55, which is more targeted for any person over the age of 55, be it people working on a temporary basis or people that are retired. This product is more tailor-made to give you still the adequate cover, but at a reduced premium.
Is that only for people available over at the age of 55, or does it also depend on their track record as to how much risk or they actually are able to take on?
Yeah, no, it is more targeted for people over the age of 55, but there are various other products that you can look at from your own situation. If you're a high net worth type client, we've got a product called Envoy, which is specifically designed to cater for the high-end market. If you are, again, a student maybe, your biggest asset is your car, then we have a cover called Easy Sure Basic, which is also ideal, more a motor-only design policy, which can also reduce your premium. If you're a professional woman, again, most of the assets is in your name, then we've got a product called Platinum Woman, which is also more focused at reducing premium for the risk attached to female drivers.
I take it consolidating your portfolio is also a good idea, because it doesn't help to have your vehicle insured with one company, household contents with another, life insurance with another. There are benefits to grouping them with one company.
That is correct, yes. If you consolidate it, some companies offer what they call a loyalty program. So there's added benefit if you have all your assets insured at one central insurer.
Abri, just before we close off our conversation, I take it it's always a good idea as well to pay your premiums upfront at the beginning of the year.
That's correct, yes. We have at Alexander Forbes also what we call an annualized premium, which if you pay your premium at a certain period in the year upfront for 12 months, you'll then get a special discount on your year premium. This will also then assist you not to pay the month-to-month premium, which you can again save.
Abri, thank you so much for your time today. Great speaking to you. That was Abri van Rensburg, who's the Senior Manager for Procurement at Alexander Forbes Insurance. Join us next time on Personal Finance, where we give you more money-saving tips.